Well, we have a lot of domestic demand momentum. We just heard services doing well, construction doing well. So it's maybe not a surprise that Singapore avoided a recession here. But keep in mind, the annual growth numbers are still fairly weak. And that is primarily because the global economic environment is just not helpful. It's manufacturing that it's the main drag. It is exports that's the main drag. And there's very little policymakers can do about this because it's really about U.S. demand, Chinese demand, European demand. And if that's not coming up anytime soon, well, then we have very stiff headwinds for the Singaporean economy from the external side.
Yeah, which is sort of the next question I was going to ask you, Fred, because, I mean, Singapore is an open, trade-dependent economy, and a lot of people have been looking at it as sort of a bellwether for what's going on in the rest of the world, what kind of shape the rest of the world is in. Does that still hold true?
It still does because, of course, the economy is very sensitive to global trade flows. The fact that growth is not even 1% now in annual terms really highlights the external drags. Now, for the MAS, there's a challenge actually here because we have a very weak external environment, but we have a very strong domestic environment still with services and construction. And so do you adjust policy on the external factors, or do you adjust policy because of domestic factors? That's going to be the key question going in October. And actually, that's what a lot of central banks are wrestling with, seeing still domestic demand strength, but the external weakness coming through now.
Frederic, this is JP Ong, very much closely tied to the manufacturing sector in Singapore, which comprises about 20%, I think, of the entire city-state's GDP, is also exports. How much of these manufactured goods are actually leaving Singapore's shores and being sold to overseas markets? And we do that non-oil domestic exports is coming out early next week. Do you have an indicator or any idea of what that actually might look like, if it will continue to contract for the 9th consecutive month, or if it might sharply show signs of a slight recovery like we've seen in some countries like the Philippines and whatnot?
Most likely, we're still going to go into a very challenging number here because you look at Chinese exports, you look at Korean exports already out for the month. They have not lifted, and that is because we're seeing still declining demand from the large markets across the world. We also have some new data out, for example, for new orders for electronics globally, which are contracting in the month of June. And so that is an important indicator for Singapore because, of course, we export a lot of electronics out of Singapore. There's always some volatility with petrochemicals, pharmaceuticals, but the electronic sector is not looking strong at the moment.
Fred, if the outlook is looking challenging, especially on the external side for Singapore, then does the MAS have to consider perhaps loosening policy settings, or are they appropriate?
Considering certainly, and because there's very little prospect of the global trade cycle suddenly turning, right? The numbers out of the U.S. are likely to weaken going forward. Europe is going to weaken. And even in mainland China, we're not really seeing that lift coming through. So on the base of that, you would say, well, the MAS might want to tweak policy. However, and this is the tricky part, because domestic demand is still so strong in Singapore, and we have tourism coming in, and we have services doing very well, maybe there's an argument to wait until sort of early next year. On balance, because of the strength of domestic demand highlighted by today's GDP number, we would still expect them to move next year rather than this year.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.